My name is Darren McDowell and I'm a partner in Harbinson, Mulholland. And I'm going to talk today about the whole question of whether or not your organisation needs an audit. Now, this is not the most exciting of topics, but I can guess if you've clicked on the link, you're sufficiently interested to bear with me to the end here. I want to cover 3 points. The first one is the whole question of whether to audit or not to audit and the regulatory requirements around that. The next point considers the extra bits that we need to look at. And the final point is around the benefits that your organisation might obtain from an audit. So in the first point, to audit or not to audit, the Companies Act 2006 sets down some limits that apply to both limited companies and limited liability partnerships. And essentially, you're going to be exempt from an audit if your organisation is underneath these limits. And the limits are that sales or turnover has to be less than £6.5 million per annum, and the total assets in the balance sheet at the end of the financial year need to be less than £3.26 million. Now, in that calculation, there's no deduction made for any loans or other liabilities that you might have. So up until recently, we had many property companies that needed to have an audit, despite the fact that there was a significant amount of borrowings involved. And the last point is that the company has to qualify as a small company, meaning that the above limits must be met and it should have less than 50 employees. So, moving on to the extra bits. Real life's often a lot more complicated than both statute and textbooks are going to have us believe. And we have to consider other areas and circumstances which mean you're going to have an audit performed. And one of these is that if more than 10% of your shareholders requested an audit be performed, then this needs to happen. And very often with our companies, we would see venture capitalists putting funding in, and part of the condition of that funding would be that they have to have an audit performed. Another point is that the Articles of Association of a company or the constitution or trust deed of an organisation might request an audit to be performed. If you're operating in the regulated sector, such as travel agents and insurance brokers, then you might well have to have an audit performed irrespective of the limits that we have discussed. And lastly, if you're operating as a charity, much lower limits apply, and you really need to speak to us because it's quite complicated and we need to look at your specific circumstances. So the last point I want to cover are the benefits that having an external audit might have on your organisation. Part of an audit will involve an external accountant coming in and looking at your accounting systems, and they might well see areas for improvement and areas that can be tightened up, and you can of course benefit from this. Also, the revenue and the banks might view a set of audited accounts more favourably. And lastly, if you're grooming or preparing your business for sale, then a potential purchaser is going to view a set of audited accounts more favourably than a year-end set of accounts that have been produced, because it provides them with more comfort that the accounts have been subjected to some form of external scrutiny. So to conclude, this is not a straightforward area. There are certain regulatory levels that have to be abided by, and if you exceed them, you're going to have an audit. But in addition to that, there are extra bits you need to consider, and there are the whole area of benefits. It really is up to your own specific circumstances, and I'd advise you to get in touch with us and we can give you the best professional advice that is suited to you. My contact details will be appearing at the end of this presentation.